Good afternoon and welcome to India Today. I'm Anjali Istawal. Big news coming in from Bihar. This is related to the seat sharing formula of the NDA parties. There was a joint press conference scheduled for 4 p.m. today, and it seems it has been cancelled. Why? Could there be a last-minute hiccup as far as NDA seat split in Bihar is concerned? The BJP and JDU apparently are yet to agree on Chirag and Manjhi's seat. So this is a big news that is coming in right now. Last evening it was announced that these parties have decided the seat sharing formula. Joining us right now is India Today's Rohit Singh. Rohit, what has happened? Why is the press conference cancelled?
Well, see, there are some last-moment glitches which we can say still emerging as far as the seat-sharing agreement which was sealed yesterday is concerned. Because yesterday we saw that it was decided that both BJP and JDU would contest on 101 seats and 29 by Chirag and 6 each by Manjhi and Upendra Kushwaha. And today it was expected that there will be a joint declaration also as to which party will be contesting from which assembly constituency. But now what is emerging is that there are some differences which still persist over the seats that Chirag Paswan has demanded, because those seats are presently being held by the Janata Dal United, and there have been several rounds of meeting that have taken place since morning at the residence of JDU working president Sanjay Jha's residence. Samrat Chaudhary, Vijay Sinha from the BJP are constantly holding consultations with the JDU top leadership regarding the seats that each party will be contesting, and there are still issues on few of the seats which Chirag Paswan wants and Jitana Manjhi also wants. So that is why, keeping that in mind, that there has been no consensus that has been reached till now. So the press conference which was scheduled to be held today at 4 p.m. has now been, in fact we can say, cancelled for the day. And maybe tomorrow we can see that a fresh press conference will be held, and again the official declaration will be made that which alliance partner from the NDA will be contesting on which seat. Back to you.
Right, Rohit, do tell us, because what we'd seen late last evening was an extremely positive note on which each of the leaders of the allies had come out and tweeted and said, yes, in a friendly environment, we've come to a seat-sharing formula. But now suddenly, one would have expected that all those last-minute details have been ironed out. So what could be the sticking point? If you could pinpoint, which seats could be the sticking point, if we could speculate?
Well, see, yesterday we saw that all the alliance partners, BJP, JDU, Chirag, Manjhi, Upendra Kushwaha, they all came out on the social media posting that unanimously the alliance has decided that how many seats that they are going to contest. But after that, when Jitana Manjhi reached Patna after the declaration was made, he looked pretty disturbed, and he said that he had demanded 15 seats in the alliance, but he has got only 6 seats, and he was not very happy with only 6 seats that his party has got. However, he said that he will continue to be a part of NDA. Then today we saw, in fact, last night only we saw Upendra Kushwaha also taking to social media to express his displeasure at the seat adjustment that has taken place, that he has also got only 6 seats. Today, when he returned to Patna, he was doing all the shero shari on the social media, and he was also expressing his displeasure that he also was not happy with only getting 6 seats. And it is very much evident that Chirag Paswan, who has got 29 seats, right, it has not gone down well with Jitana Manjhi and Upendra Kushwaha. So still some differences remain in as far as the NDA is concerned, but everyone is maintaining that they are together and will fight elections together.
Right. Thank you, Rohit. So yesterday we saw the NDA partners gloating that their seat-sharing formula is final, while Mahagathbandhan's is not, and today the cancellation of their joint peace. And now let's go across to Sakshi Batra of Business Today with all the updates of the market. Sakshi, over to you.
welcome to Market Closing on our new collab show between Business Today and India Today Television. I'm Sakshi Batra. It's 3 p.m. and we are here to get you all the market closing action on D Street. First up, let's take a look at what's hot in the world of corporate and the financial space. Gold and silver hit new highs. Top commodity guru says he is not buying gold and silver at these levels. Jim Rogers tells Business Today Television in an exclusive chat that geopolitical tensions will keep on upping the appeal of bullion as safe haven investments. Says he is also waiting for dips to enter the Indian equity market. In an exclusive conversation with Business Today Television for its Diwali special series, top market master Ramdeo Agarwal says stocks are in a consolidation phase, but outlook remains strong. Expects earnings to power a market revival. Bullish on QSR space, but warns IT stocks may stay in the slow lane for some time. After Trump tariffs tumors, we've also seen markets are off the day's low point. The Nifty is now nearing the 25,250 odd mark. The Sensex is still down 150 points. IT stocks have slipped in trade. Wipro, Persistent, Infosys are down by 1.5% to 2% each. We're also looking at HCL Tech trading in the green right ahead of its Q2 earnings today. Tata Capital, this year's largest 15,500 crore rupees IPO, has made a muted debut on D Street, listing at just 330 rupees, 1% above its issue price of 326 rupees. Chairman Saurabh Agarwal at the listing ceremony promises sustainable growth for the stock. Tamil Nadu bags its biggest investment ever. iPhone maker Foxconn to plow another 15,000 crore rupees into the state. Fresh investment to create 14,000 high-value jobs. Government says the money will bring next level value-added manufacturing, R&D integration and AI-led advanced technology operations. Let's straight away look at how the markets are trading in the last 25 minutes of trade. The Nifty is at 25,220, still in the red, but off the low point of the day. You are still looking at PSU banks among the top sectors that are up into the green. Of course, along with this, we have private banks and the financial services also pulling up. From the mid and small cap space, it's the mid cap stocks that are also finding some green in the trade today. We're also looking at some pickup take place as far as the real estate sector is concerned. Remember, through the morning trade, we've been seeing subdued moves there, but finally, they are seeing some dips that are getting bought into as well. Top movers on the Nifty include names like Adani Ports, Bajaj Auto, Bajaj Finance, Interglobe Aviation, even Shriram Finance and Bharti Airtel. While on the declining side, you still have a lot of names from the FMCG space like HUL. Tata Motors is also among the top losers. We are also looking at Wipro, Infosys from the IT pack, also dragging in trade as of now. In fact, let's also look at welcoming our guests on board. We have Gaurav Sharma, Associate Vice President and Head of Research at Globe Capital, joining in. We're also welcoming now Astha Jain, Senior Research Analyst at Securities, to be with us on the program to discuss the market outlook from here. Gaurav, good afternoon. Good to have you with us. First up, tell us how are you looking at the markets in the run-up to Diwali? We're also seeing last 2-3 odd weeks looking at some improvement on the sentiment, some dips being bought into. But what is keeping the sentiment in check is something that I would like to know from you.
Yes, Sakshi, good afternoon. Thanks for having me today. So, I think most of the red flags are behind us now. Whatever downside we were expecting is the past. We have seen Bank Nifty is actually stealing the show for the broader markets now, and it has set the tone for the entire the benchmarks. Private banking has played their part, provided us with the needed support which was required, especially in today's trading session to hold the ground. As we go forward, head towards Diwali, I think the stage is set for a further up move. GST cuts have already been there by the government. They have provided us with the needed, most needed rather, the requirement of the hour. The 1% repo rate cut will be culminated into profits going forward. when we said all these things come together, rates come down from both the factors, where the GST, the shopping at the shop floor level are seeing there. I have in fact done the shopping at various stores, and I get a reduced price. I am a happy customer from that point as well.
Sure.
Other things also taken into account, I think going forward, the next 2 quarters will be more beneficial and will be better than the past ones. Having said that, there are certain headwinds as well that they are keeping the up move on check, and they are primarily Mr. Trump. U.S. president is coming up with heavy kind of statements every now and then, and that is impacting markets all across the globe. It is not only India or China among the emerging ones, it is the entire globe that is being adversely impacted, and the volatility is mounting. India VIX today again jumped up high, and that is one of the reasons. Otherwise, it was laying low. Now, when we talk, the Nifty index is just about 60 points down. Just an hour back, it went on to touch the highest point of the day, and the entire gap left over in today's opening was filled. So I think this is a good move. This is otherwise a very good trading session so far. Another 20-25 minutes of trade left. I think Nifty would settle somewhere around 25,200 odd levels, which is a healthy sign. And going ahead, again, supports coming in from the banks will continue to help and support the markets. HCL Technology will be reporting their quarterly numbers post-market today, and I'm expecting a mute set of results. Nothing very much too great, nothing very bad either. Therefore, I take it on a positive side that it will not have a negative impact on the market. Therefore, a pullback rally can continue in tomorrow's session now.
Okay, let's also take a view from Astha, who's with us. Astha, good afternoon. What's keeping you busy these days? Is it IPOs or is it the secondary market opportunities? What are you looking at?
Hi, good afternoon, everyone. Definitely, both the primary markets and secondary markets are really right now. They are like having a lot of events going on, and that is really keeping us so busy. Right now, the kind of listing we have seen for the Tata Capital, I must say, the listing is not bad at all, because looking after the IPO size, looking after the valuation at which the company was bringing the IPO, and looking after the subscription figures, I think in fact they are holding their issue price. So now they are giving a route to retail investors who just invest only for the listing day purpose. I mean, both primary market and secondary markets are really giving us a lot of content to work on. And definitely we are finding markets to be very attractive at this point of the time. Especially healthcare is just gaining our interest, in which we are really liking Dr. Lal Pathlabs and Thyrocare.
Okay.
So these are some of the counters which we are really liking at this point of time.
Fair point. So markets looking at attractive opportunities in healthcare abundant, and we're also looking at the IPO buzz. But let's also try and understand from another market master, what exactly is it that you should be looking at? In an exclusive conversation on Business Today television this morning, we've seen market master Ramdev Agrawal, the chairman and the co-founder of Motilal Oswal Financial Services, joining Siddharth Zorapi, our group editor of Business Today, and my colleague Apa Bakaya, as he's talking about looking ahead to Sambat 2082. The market veteran has shared why he remains optimistic for the year ahead and which are the sectors that he's truly bullish on. Let's listen in to that, John.
What should investors be looking forward to in terms of the new Samvat?
Last year has been a very interesting year because it started with a lot of promise, and I think if you look at the index, I think probably it's flat. It's just about flat in the sense that 0.5% or 1% higher than last year, 12 months if you see. So we are at kind of a consolidation phase. Year before was about 12-13%, and 1 year even before that was another 12-13%. So my sense is that despite everything in terms of geopolitical and whatever corporate challenges were there was a slowdown in between post-election and things like that. We are coming out of it, and government agencies are trying their best to come out of it, and not only come out of it, but actually give the major boost to the consumption and so-called animal spirit in the system. So both the regulators, whether it is SEBI, whether it is RBI, government, fiscal as well as monetary, I think from all kinds of things we are seeing push. So I would think that growth will resume, particularly in the earnings side, and hence the year looking forward, 25-26, that should be a much more optimistic year than what we had in the last 1 year. So I would remain optimistic for next 1 year and even more optimistic on a 3 to 5 year basis.
Ramdevji, I want to hear your thoughts on two specific variables. One, what is happening in the IT sector? It is shedding jobs. There is a technological shift underway, and many questions are being raised about our Indian IT companies, especially in the era of AI. How do you see these two developments, and what specifically do you forecast for the IT sector?
As far as the listed services companies are concerned, they are also going through the consolidation phase. They have to redesign their business model. They have been able to redesign many times. If you look back, whether it is 2000 discovery of web, whether it is ERP systems, then the development of web, then the development of cloud, and now we are talking about development of AI systems in the enterprises. Because enterprises cannot be run by without any people. I mean, AI can, of course, give you productivity gains, but I think you still need a lot of people to run the enterprises. So my sense is that they are relevant, but right now they're headwinded in terms of their own revenue growth for some time. But that sector, which is about 14-15% of the economy in India, the listed IT space, that would remain, I think, in the slow track for some time to come.
I want to discuss this simply to understand, whether you're excited about quick commerce and if it's a larger strategic bet on India's digital consumption story. Do you see more investments when it comes to India's private market tech plays?
See, India has been growing. It is the fastest growing. Let's understand, India is the fastest growing large economy in the world. So that I don't have to say that. It is happening. So clearly, we are in a very sweet spot. Now, with the digital, within the economy itself, within your 7-8% growth, how exactly the consumer behavior changes? Like what happened? The value migration happened from public sector banks to private sector banks, from wired phone to wireless phone. Like that, the same domestic consumption of groceries is happening from a corner store to, first it went to modern retail, and now it is going to your quick commerce. And you know about better than anybody else what portion of your grocery is coming by way of quick commerce.
All right, that was Mr. Ramdev Agarwal talking about how bullish is he as far as the markets are concerned over the next 1 year. He's optimistic that this next year will turn out to be much better than the one that we are in currently as far as the Samvat is concerned as well. Several sectors that he believes the growth can continue. Gaurav, coming back to you, Mr. Agarwal was talking about the e-commerce space, and you were also alluding to a lot of consumption-oriented sectors. You said that you're a happy consumer because looking at the GST rationalization, that's really led to people going out there, spending the extra moolah that they have in their hands. Help me understand, what's your thought in terms of the good news that's already in the price and where the rally can continue from here on over the next 1 to 2 quarters as well?
Actually, I believe that considering the ongoing festive season and the upcoming wedding season, plus the winters, I think the demand for cosmetics will continue to rise. For that matter, I think Nykaa is a very sweet spot. I think we have discussed it earlier as well on the previous shows that we remain bullish on Nykaa, and we expect that the rally what we have seen in Nykaa will continue and so as well, and much higher levels could be seen. Now they are getting good traction from their shops and stores as well. They are also opening some specific luxury stores as well, and we remain positive that this will have a larger impact because a lot of customers we see find discomfort in purchasing luxury products online. They are doubtful whether they are getting the original products or not, and that particular thing is offset when we go to a store, see it by ourselves, we feel it, we can test the samples as well. I think this gives immense pleasure to the end user. Apart from that, something like Zomato will continue to get demands as far as quick commerce business is concerned, app-based businesses are concerned. I think this is a show setter. It has set such a kind of an example that a small thing can turn out really big and in a very small time as well. Blinkit is a live example. What we are seeing today, Zomato's, Blinkit's, Amazon, they are part of our life, and I think more to go. Mr. Agarwal rightly pointed out, we can simply set how much amount of spendings we are doing online, which clearly gives us an idea what kind of business is this, and what kind of numbers and potential this particular business has.
So Nykaa and Zomato, those are the two choices that you have really talked about, which actually reflect this digital consumption and are best placed to really play on that as well. Astha, coming back to you, we are also seeing that the earnings season is already underway. What has stood out for you so far between the IT companies that have started to report? We've had retail giant Avenue Supermart report its earnings as well. We are, of course, awaiting HCL Tech that Gaurav alluded to today. Anything specific within the earnings season that you're looking at? What would appeal to you?
Yes, definitely. So the way we have seen the Avenue Supermart number, markets are not liking that number at all. And the result is what we are seeing in the stock prices moving towards the southwards direction. So my idea here is that in the retail space, there are specific retail counters which one should have a look upon, not all the, retail counters. And as Gaurav has also mentioned that Nykaa is among one of them. So we have to look at it in a different way. Talking about IT sector is looking, decent to us at this point of a time. And I'm taking the cue from the various, IT giants which has posted their numbers. So in fact, I think TCS was one of them that it has posted a decent set of a number. So we really need to see how the one quarter going to be, especially the next quarter, that is the December quarter, because this quarter we believe that IT sector will not post that very strong side of a number. But coming 3 months will definitely, give us the signal regarding the movement of these IT counter. So right now we believe that HCL Tech is well poised to move upside from here, given the kind of earnings we are expecting from this counter. And we believe that this definitely give us strong earnings as at least against the market expectations.
All right, so that the earnings season as well as the IT sector, we still need to give another quarter before really taking a call as to whether momentum is coming back to the IT sector after it has underperformed for a large part of this year as well. But let's again continue by sharing with you what's really happening this Diwali exclusive special conversations that we've been doing. Earlier this afternoon, we've also spoken to commodity guru, Mr. Jim Rogers, the founder of the Rogers International Commodity Index, and he's actually shared his investment strategy in gold and silver as well. He also remains bullish on both the metals, even as these metals have soared to record high levels even as of today. Let's listen in to what he truly had to say. Where are these precious metals, gold and silver, headed from here?
Well, I own both. I am not selling. I hope that my children own my gold and silver someday. Everybody should own some gold and everybody should own some silver.
So, Mr. Rogers, I want to ask you, in this run-up, were you able to catch most of this rally yourself, or did you too miss it?
No, I own gold and silver. I have never sold any of my gold and silver. I bought more silver recently, not gold. Silver was down. Gold was at all-time high, so I bought more silver. But I own both. I'm not selling either.
Absolutely. So we do see some parts of the world at record high levels for equities. US is at record high levels. We're seeing a lot of Asian markets like Japan at all-time high levels. But India, in comparison, this year has given virtually no returns on the Indian stock markets, at least on the exchanges level. I want to understand from you on India, what is your stance, Indian equities per se?
I think that Delhi understands it is okay to be successful. They want people to be successful. All of my life, Indian politicians have said they want people to be successful. They didn't mean it. They didn't really like rich people. But I think that now Delhi understands success is good. being rich is good. So it's a major, gigantic change in the Indian mentality. So for the first time in my life, I want to buy Indian shares with the knowledge that the government now finally understands that profit and success is good. It's a major change in India. It's very, very exciting for India.
Do you think silver has gone up too swiftly in a very short period of time, and it's not sustainable at this stage, at least in the near term?
Well, as you just pointed out, silver's gone straight up in the last 2 or 3 weeks. That usually means there's going to be a correction or a reaction. That's nearly the way markets work. It's nothing to do whether it's silver or whatever it is. That's the way markets work. When something goes straight up, it usually has a correction. If silver has a correction, if gold has a correction, I hope I will be smart enough to buy more of both.
More of both. Can you help us understand, Mr. Rogers, out of your own investment portfolio, how much of allocation do you do to gold and silver? And what part is equities? You did say that you've sold some equities because they've shot up to all-time highs at this stage. You were not comfortable owning them, but you're still comfortable owning gold and silver at this stage. And any dip will actually make you, invest more. How much of gold or silver do you think is enough?
It's a very good question. I will repeat that everybody should own some gold. Everybody should own some silver. Put it in the closet, put it under the bed. Everybody should have some, because when there are problems, when there is turmoil or disaster, gold and silver always will work to save you in the end. Always, they always have, so I own both. I don't plan to sell them. I plan for my children to have my gold and silver someday. Everybody should own gold and silver, because when there's a major problem, gold and silver have always saved you.
Mr. Rogers, just in the end, help us understand, we've seen gold rally from $3,000 to $4,000 in this year, from March to October, in a very short period of time. Will we move from $4,000 to $5,000 in a similar short time, or will gold continue to be in a range-bound territory for some time now?
If it goes to 5,000, I will not be buying anymore. But if it goes down somewhere in the next year or so, I hope I'm smart enough to buy more. I repeat that I don't like buying things at all-time highs. But if gold has a reaction or silver has a reaction, I hope I will buy more. I don't think there's anything too much silver or too much gold, because the world is going to have more problems in the next few years. Silver and gold have always been the place to be when the world has problems. I'm not giving you investment. I'm just talking to you about history. Human beings. That's the way it's always worked.
All right, Jim Rogers consistently talking about gold and silver, how he owns it. He does not want to sell it, even though he's cautious at the current prices. He's waiting for dips to enter more. That's the commodities guru for you. Gaurav, coming back to you, the whole question that investors have been pondering, because Nifty has given 0 or just about 0.5% return, something that Mr. Ramdev Agrawal also alluded to this year at all. And look at what has happened on gold. 61% of a rally year to date, 90% rally on silver prices. Most of that 90% rally has actually come for silver in the last couple of months alone as well. How are you looking at this huge difference between the asset classes, and what are you advising clients?
Yeah, so Sakshi, I think it is long said that equities and commodities, especially these the two precious metals, do not move in tandem with each other, and this has proven completely outright here. Year-to-date returns for Nifty indexes, I think, is just about 6%, and for commodities, you have told it all. I did not mention that. So I think the glitter in gold completely outshined equities across, not only only India, across the globe, and they have done a phenomenal job. But going forward, one thing is very important to understand. If things start to settle down, if the geopolitical starts to settle down, I think equities will slowly and steadily resume their upward trajectory. One thing we need to also understand that as far as Indian equity markets are concerned, we haven't fallen. Yes, the equities did not perform and gold did. So a shift of complete buyer's interest was there, and it was due to uncertainties. It was due to the risk of wars and due to some lack of clarity when it was primarily again Trump's has a role to play in it, and I would say a major role to play in it, completely taking the equities off track globally. So I think once the trade deals are settled, we are done with it. Things are likely to get down smoother for equities going forward, and I firmly believe that next year would play out much better than what we have seen this time.
Sure. Let's look at the market closing, viewers. It's 3:30, 25,238 is where we are at. So off the low point of the day, 47 points lower, albeit still on the Nifty right now. But when we look at the sectors, PSU banks, financial services, private banks are the top gainers. Mid-caps also pulled in some gains towards the end of the session as well. Top movers in trade include names like Adani Ports, Bajaj Finance. You also have Bajaj Auto. Among the top three movers, two of them are from the Bajaj conglomerate. You also look at Shriram Finance on your screens as well, and Interglobe Aviation, Bajaj Finserv also. So among the top five movers, at least three of the Bajaj counters definitely in the top show today. Now Bharti Airtel, Axis Bank, these were some of the other gainers that we've actually seen in today's trading session as well. Let's actually pull up the Nifty 500 movers to really see where the broadest index really had a lot of move today. Well, you had names like HLE, Glasscoat, 5% higher, C Infosystems, that's MapMy India. Also UTI AMC, about 4.5 to 5% kind of a move that we actually saw across the board. Even Tata Group stock, Tata Investment Corporation, that pulled up in trade, 6.5% higher in trade today towards the end of the session as well. So those are some of the names that have actually gone into creating some moves on the higher side. But what's dragged in today's trade? IT names. Remember, IT index is the top loser today, and therefore you do see names like Wipro, falling in trade. Also Tata Motors. Remember, tomorrow is when we do see the record date for the demerger of the commercial vehicle business for Tata Motors. Infosys also down from the IT pack. Power Grid, BEL. These are the other top laggards in the trade today. So that's as far as the markets wind up is concerned. But let's start to take some viewers' choice questions that we have for both our guests today. We'll take the first question from Shiv Sharma. He says he is from Delhi and says, I've received Tata Capital allotment, but I'm not happy with the listing. So should I wait or sell now? Let's take this up with Astha. You, Tata Capital IPO, should I wait or sell?
Actually, the listing happens as per our expectation, and what we are recommending that it is a long-term story to bet upon, not a short-term story. And hence, if one can wait for long-term, maybe here the time horizon can vary from 3 to 6 months, and definitely it is a hold. Because I think in the long term, definitely the kind of business they have taken over for the Tata Motors Finance definitely will yield good results. But it is a purely long-term story. So just see the horizon and then stay invested if it is a long-term.
Okay. We have the next question from Prerna Patil. She's from Mumbai and says, I want to invest 2 lakh rupees this coming Dhanteras. So should I choose gold or silver or should I invest in equities? Gaurav, how would you really look at this question that's coming in? 2 lakh rupees, gold, silver at these all-time high levels or equities?
See, I'll take it simply that this is not the time to buy bulk of gold and silver here. This is the time one should, if you have missed the bus already, then it is not the time to hop on. Simply go by SIP and concentrate on equities. There are ample opportunities. Something like a Bombay Stock Exchange, BSE, is trading at a very attractive price. You can consider that. And some of the banking stocks are also placed well.
Okay, let's take the next one. This is from Puran Shah from Bharuch. Puran wants to know, where should I invest this Q2 earnings season? Asa, we'll take that with you. This earnings season, which segment, sector or stocks that you're betting big on?
So we are betting big on banking space in that
Okay.
public sector and private sector. Both banks are looking good to us. So definitely banking space is looking attractive at this point of a time. And we would really like to deploy the funds looking after the Q2 earnings, but we believe that the earnings will definitely on the higher side. So that is the one space. Another space which we find attractive is the power space. We believe that power space is also well poised to show some good returns from here on. And as we have seen the results of the Bari, so I think going
Sure.
ahead also power sector is also expected to show good moves on the basis of results.
Fantastic. Well, with that, we are about to wrap up the show. Thank you so much, Gaurav and Astha, for being with us on India Today and helping all our viewers out decide in terms of their investments. With that, viewers, it's a wrap on the Business Today show. And in case you too have some questions about investments in mutual funds, SIPs that you have been doing or want to start off, stocks or gold-related queries, then please do send them to us on the number that's flashing on your screens. And don't forget to catch the morning market opening action with Abba Bakaya at 9 a.m. tomorrow.